Alrighty. Quite a bit to cover today. Wasn't able to finish reading the 10K yesterday because the stream just randomly shut off. I don't really know why. Hopefully that's not a thing that continues to occur, because that would be pretty annoying. I don't even remember where we left off. Let's see. Hey, bro, it's fair value. The carrying stream, dude. It's fair value. Oh, assets, the carrying value, fair value. Property and equipment. Operating, exactly sure. Assets that are measured. What page was that? I missed it. I missed it. $57. Okay. 57. Oh, I'm like right here. Nice. Nice. What's up, Matt? What's up, Moose? Okay. Let's finish this stupid 10K. Let's finish it. Am I not a member anymore? Probably don't have auto payments on or something. I have no clue. Yeah, or you could have got it gifted. Yeah, that'll do it too. That sucks. I'm fucking fraudulent. I hate fraud, bro. I've only had it happen a couple times, but it was on credit cards, so it wasn't like a huge deal. They came out with One Piece power packs finally. I'm not going to be pulling any, you know, the title's just clickbait, but we will go through it and make a little stream clip about it. And hopefully they do Magic and Yu-Gi-Oh next. I assume they'll do Magic next and then Yu-Gi-Oh last. Most likely. But pretty cool, pretty cool. They still got the Buck cards going. As you guys know, I'm never pulling power packs again because it's garbage, but it's a good stream clip. Good clickbait. Got my money back, but definitely annoyed. They ordered Netflix, Domino's, and then took the rest of the money on my debit card. Dude, that's crazy. Good thing I keep my money in savings account. Yeah, for real. That's insane, bro. I wonder how they got access to it. Like that's why I used credit cards, because if someone gets access to a credit card, it literally doesn't matter. Even if they like spend a bunch of money on it, you'll just be able to get the money back very easily. It's a little harder to get the money back from your debit. I don't even think you can get the money back from your debit card. So credit cards are always the way to go. Hey, Ron, what's up? Keep my money in a safety deposit box under your mattress, bro. Are we gambling? Nah, definitely not. I ain't pulling no power pack, bro. I've pulled enough power packs to know that it's a complete scam. Straight up. It's so trash. Honestly, if I would have just kept all the cards I pulled when I first started, I would actually be up and very profitable on all the cards I pulled, but I'm just not. I don't know. I just wanted to make videos about it, so keeping the cards wasn't really in my best interest. And looking back at it, making videos about it was pointless as well. Market crash today, get ready. The market's down like not even 1%, bro. What the fuck you mean market crash? I don't think you've ever seen a real market crash. I don't think you've ever seen a real market crash. When it's down 4 or 5%, then you can come back and spread fake information. But you're getting banned today. When it's actually crashing, then you can come talk about it. And also, why weren't you talking about the market crashing when it was at all-time highs? Talking about the market crashing in the middle of it going down is honestly dumb. So yeah, maybe you'll figure it out one day, I guess. Maybe. They steal the bank's money instead of yours. Yeah, and it's just easier to get back. Like if you from what I know, if you get your money stolen out of your debit card, you're just fucked. But if they steal from the credit card, then you know the bank has to pay it back. Pulled one, got a Luffy worth 150. Selling it, not really a One Piece fan. Fair enough, fair enough. I ain't gonna pull one. I'll just talk about it. Hugh G, what's up, Hugh G? Alright, let's finish reading this stupid 10K, bro. Sorry, I wasn't able. For some reason, my stream just like shut off yesterday. I was in the middle of reading and it's just, I look up and the stream's turned off. It was so dumb. Gamestop giving out a Gengar promo card if you make a purchase tomorrow. What kind of ooh, what's that? How'd you figure that out? Where'd you see that? GameStop social media? Oh, well, I don't have social media, so probably can't find that unless it's on trash Reddit. Which doesn't look like it is. Because why would there be useful information on Reddit? That would be against the rules. You have to post complete dog shit. Yeah, I don't see it. Oh, that's cool. I probably won't go buy anything, but I guess if anyone in the chat's gonna buy anything from GameStop, you get a Gengar promo tomorrow, I guess. I can't verify it, but take Hugh G's word for it. Alright, let's read this trash, bro. I'm so done with reading this. Okay. Assets that are measured at fair value on a non-recurring basis. Assets that are measured at fair value on a non-recurring basis relate primarily to property and equipment, operating lease ROU assets, and other intangible assets, which are remeasured when the estimated fair value is below its carrying value. When we determine that impairment has occurred, the carrying value of the asset is reduced to its fair value. The carrying values of our cash, restricted cash, net receivables, accounts payable, and current portion of debt approximate their fair values due to their short-term maturities. The fair value estimates of trade name intangibles and store-level property and equipment are based on significant unobservable inputs, level 3, developed using company-specific information. These assets were valued using variations of the discounted cash flow method, which require assumptions associated with, among others, projected sales and cost estimates, capital expenditures, royalty rates, discount rates, terminal values, and remaining useful lives. During the first quarter of fiscal 25, management approved a plan to divest the company's operations in France. In connection with this plan, we reclassified debt related to the French disposal group to liabilities held for sale within our consolidated balance sheets. The debt had previously been included with our consolidated debt balance and consisted of government-subsidized low interest French term loans maturing from October 2022 through October 2026, quote, French term loans. As of January 31st, 2026, the French term loans included in liabilities held for sale had a carrying value of $7.5 million and a fair value of $7.2 million. The fair value of our French term loans was estimated using a discounted cash flow model that incorporates interest rates available to the company for similar debt with comparable maturities. The valuation technique uses level 2 inputs within the fair value hierarchy. On October 7, 2025, the company announced that the board declared the warrant distribution. The company estimated the fair value of the warrants using the Black-Scholes option pricing model, level 3. The estimated fair value of each warrant on the issuance date was 2.94, and the $173.9 million aggregate fair value of the warrants was recorded as additional paid-in capital. Of this aggregate fair value amount, $42.2 million was distributed to the holders of the convertible notes and recognized as interest expense, and $131.7 million was distributed to stockholders and recorded to retained earnings. Wow, customer-related liabilities is down. Everything's down, dude. They're just so cost-efficient now. So impressive. Even though the numbers aren't, like, that big yet, they're still just, like, every few million, I feel like, is doing its job. Let's see. Accrued and other current liabilities reclassified as held for sale that related to our French disposal group are excluded from the table above and presented with current liabilities within assets held for sale in our consolidated balance sheets as of January 31st, 2026. Okay, so that's just moved. Debt. The following table presents our debt as of January 31st, 2026 and February 1st, 2025, which all it is convertible notes, and they paid off their French term loans. So you only have the 0% convertible note debt, which is extremely valuable. It's basically not even debt because they can just issue shares to repay the note holders. They don't necessarily have to pay cash. But I guess it just depends if the stock's up or not. If the stock's up, they'll probably pay cash, I would imagine. And if the stock's down, they'd probably issue shares. If they can, you know, they might not be able to issue shares if the stock's down. So maybe they'll just pay cash anyway. I'm not really sure. I guess we'll see. Or maybe it'd be better if they issued shares if the stock was higher. I'm not really sure. How they're going to approach that. In fiscal 2025, we reclassified the French term loans associated with the French disposal group to liabilities held for sale in the consolidated balance sheets. As of January 31st, 2026, the disposal group included $7.5 million of short-term debt and no long-term debt with liabilities held for sale. French term loans. During fiscal 2021, our French subsidiary, Micromania SAS, entered into 6 separate unsecured term loans totaling 40 million euros. In the second quarter of 2021, Micromania SAS extended the loans for 5 years, with principal amortization beginning in October 2022. In connection with the extension, interest rates increased from 0 to 0.7% for 3 loans totaling 20 million euros, and to 1% for the remaining 3 term loans totaling 20 million euros. The French government guarantees 90% of these loans pursuant to a COVID-19 state guaranteed loan program. I'm pretty sure that's euros. Each of Micromania SAS term loans, as described above, restrict the ability of Micromania SAS to make distributions and loans to its affiliates, and include various events that would result in automatic acceleration of the loans thereunder, including failure to pay any principal or interest when due, acceleration of other indebtedness, a change of control, and certain bankruptcy, insolvency, or receivership. As of January 31st, 2026 and February 1st, 2025, outstanding balances under the French term loans totaled 7.5 million and 16.9 million, respectively. In fiscal 2025, we classified the French term loans associated with the French disposal group to liabilities held for sale in the consolidated balance sheet. As of January 31st, 2026, the disposal group included 7.5 million of short-term debt and no long-term debt within liabilities held for sale. Convertible senior notes. Convertible 2030 notes. On April 1st, 2025, we completed a private offering of 1.5 million aggregate principal amount of convertible 2030 notes, including the exercise in full of the initial purchaser's option to purchase up to an additional 200 million aggregate principal amount of the convertible 2030 notes. The convertible 2030 notes are general unsecured obligations of the company. The convertible 2030 notes were issued pursuant to an indenture dated April 1st, 2025, the quote 2030 indenture, between the company and U.S. Bank Trust Company, National Association, as trustee, the quote trustee. As of January 31st, 2026, the balance of the convertible 2030 notes, net of debt issuance costs of 16.4 million, was 1.48 billion. The company determines the fair value of its convertible 2030 notes in accordance with the ASC 820 fair value measurement using observable market inputs on a secondary market exchange level 2 input. As of January 31st, 2025, the fair value of the convertible 2030 notes was approximately 1.6 billion. Oh wow, that's actually really interesting. I don't. That's the first time I think they've mentioned the fair value of the convertible notes. It makes sense why they mentioned it like 4 times in the 10K because they didn't want people to get to this part, I assume. They only want the real investors reading this, I guess. Yeah, that's impressive. That's impressive. The convertible 2030 notes will mature on April 1st, 2030, unless earlier converted, redeemed, or repurchased. The convertible 2030 notes will not bear regular interest, and the principal amount of the convertible 2030 notes will not accrete. Holders may convert all or any portion of their 2030 notes at their option at any time prior to the close of business on the business day immediately preceding January 1st, 2030, only upon satisfaction of one or more of the following conditions. 1. During any fiscal quarter commencing after the first quarter ending on August 2nd, 2025, and only during such fiscal quarter, if the last reported sale price of the common stock for at least 20 trading days, whether or not consecutive, during a period of 30 consecutive trading days, ending on and including the last trading day of the immediately preceding fiscal quarter, is greater than or equal to 130% of the conversion price for the convertible 2030 notes on each applicable trading day. Interesting. I think I remember reading about that though. 2. During the 5 business days during the 5 business day period after any 10 consecutive trading day periods, the quote measurement period, in which the trading price, as defined in the 2030 indenture, per 1,000 principal amount of convertible 2030 notes for each trading day of the measurement period was less than 98% of the product of the last reported sale of the common stock, and the conversion rate on each such trading day. Each trading day measurement period was less than 98%. Oh, okay, so I guess if it goes worthless, I guess, is what that's saying. I'm not too sure exactly what that's saying. 3. If the company calls such convertible 2030 notes for redemption at any time prior to the close of business on the scheduled trading day, immediately preceding the redemption date, but only with respect to the convertible 2030 notes called or deemed called for redemption. And 4. Upon the occurrence of specified corporate events as set forth in the 2030 indenture, on or after January 1st, 2030, until the close of business on the scheduled trading day, immediately preceding the maturity date. Holders may convert all or any portion of their convertible 2030 notes at any time in multiples of 1,000 principal amount at any time, regardless of the foregoing conditions. Upon the conversion, the company will satisfy its conversion obligation by paying and or delivering, as the case may be, cash, shares of common stock, or a combination of cash and shares of common stock at the company's election in the manner and subject to the terms and conditions set forth in the 2030 indenture. The conversion rate for the convertible 2030 notes was initially 33.49 shares of common stock per 1,000 principal amount of notes, which was equivalent to an initial conversion price of approximately $29.85 per share of common stock, subject to adjustments in certain events. The company may not redeem the convertible 2030 notes prior to April 6, 2028. The company may redeem for cash all or any portion of the convertible 2030 notes, subject to the partial redemption limitations set forth in the 2030 indenture, at its option, on or after April 6, 2028, if the last reported sale of the common stock has been at least 130% of the conversion price for the convertible 2030 notes, then in effect for at least 20 trading days, whether or not consecutive, during any 30 consecutive trading day period, including the last trading day of such period, ending on and including the trading day immediately preceding the date on which the company provides notice of redemption, at a redemption price equal to 100% of the principal amount of the convertible 2030 notes to be redeemed, plus accrued and unpaid special interest, if any, to but excluding the redemption date. No sinking fund is provided for the notes. Note holders may require the company to repurchase their convertible 2030 notes on April 3rd, 2028, at a cash repurchase price equal to 100% of the principal amount of the convertible 2030 notes to be repurchased, plus accrued and unpaid special interest, if any, to, but excluding the repurchase date. In addition, if the company undergoes a fundamental change, as defined in the 2030 indenture, then holders may require the company to repurchase for cash all or any portion of their convertible 2030 notes at a fundamental change repurchase price equal to 100% of the principal amount of the convertible 2030 notes to be repurchased, plus accrued and unpaid special interest, if any, to, but excluding the fundamental change repurchase date. The 2030 indenture includes customary terms and covenants and sets forth certain events of defaults after which the convertible 2030 notes may be declared immediately due and payable, and sets forth certain types of bankruptcy or insolvency events of default involving the company or any of its significant subsidiaries, as defined in the 2030 indenture, after which the convertible 2030 notes become automatically due and payable. If an event of default, other than certain bankruptcy and insolvency related events of default with respect to the company or any of its significant subsidiaries, occurs and is continuing, the trustee by notice to the company or the holders of at least 25% in principal amount of the outstanding convertible 2030 notes by notice to the company, and the trustee may, and the trustee at the request of such holders, shall declare 100% of the principal of an accrued and unpaid special interest, if any, on all of then outstanding convertible 2030 notes to be due and payable. Okay. Convertible 2032 notes. On June 17th, 2025, we completed a private offering of $2.25 billion aggregate principal amount of the convertible 2032 notes, pursuant to the purchase agreement between the company and the initial purchaser of the convertible 2032 notes. The company granted the initial purchaser an option to purchase up to an additional $450 million aggregate principal amount of the convertible 2032 notes. Additional notes. On June 23rd, 2025, the initial purchaser elected to exercise in full such option, and on June 24th, 2025, the company issued the full aggregate principal amount of the additional notes. The convertible 2032 notes are general unsecured obligations of the company. The convertible 2032 notes were issued pursuant to an indenture dated June 17th, 2025. The 2032 indenture between the company and the trustee as trustee. As of November 1st, 2025, the balance of the convertible 2032 notes net of debt issuance costs of $19.3 million was $2.68 billion. The company determines the fair value of its convertible 2030 notes in accordance with ASC 820 fair value measurement using observable market inputs on a secondary market exchange, level 2 input. As of January 31st, 2026, the fair value of the convertible 2032 notes was approximately $2.92 billion. The convertible 2032 notes will mature on June 15th, 2032, unless earlier converted, redeemed, or repurchased. The convertible 2032 notes will not bear regular interest, and the principal amount of the notes will not accrete. Holders may convert all or any portion of their convertible 2032 notes at their option at any time prior to the close of business on the business day immediately preceding March 15th, 2032, only upon satisfaction of one or more of the following conditions. 1. During any fiscal quarter commencing after the fiscal quarter ending on November 1st, 2025, and only during such fiscal quarter, if the last reported sale price of the company's Class A common stock par value .001 per share for at least 20 trading days, whether or not consecutive, during a period of 30 consecutive trading days ending on and including the last trading day of the immediately preceding fiscal quarter is greater than or equal to 130% of the conversion price for the notes on each applicable trading day. 2. During the 5 business day period after any 10 consecutive trading day period, the quote measurement period, in which the trading price, as defined in the 2032 indenture per 1,000 principal amount of notes, for each trading day of the measurement period was less than 98% of the product of the last reported sale price of the common stock, and the conversion rate on each such trading day. 3. If the company calls such notes for redemption at any time prior to the close of business on the scheduled trading day, immediately preceding the redemption date, but only with respect to the notes called or deemed called for redemption. And 4. Upon the occurrence of specified corporate events as set forth in the 2032 indenture, on or after June 15, 2032, until the close of business on the scheduled trading day, immediately preceding the maturity date, holders may convert all or any portion of their convertible 2032 notes at any time in multiples of $1,000 principal amount at any time, regardless of the foregoing conditions. Upon conversion, company will satisfy its conversion obligations by paying and or delivering, as the case may be, cash, shares of common stock, or a combination of cash and shares of common stock, at the company's election, in a manner and subject to the terms and conditions set forth in the 2032 indenture. The conversion rate for the convertible 2032 notes will initially be 34.58 shares of common stock per 1,000 principal amount of notes, which is equivalent to an initial conversion price of approximately $28.91 per share of common stock, subject to adjustment in certain events. The company may not redeem the convertible 2032 notes prior to June 20th, 2029. The company may redeem for cash all or any portion of the convertible 2032 notes, subject to the partial redemption limitation set forth in the 2032 indenture, at its option, on or after June 20th, 2029, if the last reported sale price of the common stock has been at least 130% of the conversion price for the convertible 2032 notes, then in effect for at least 20 trading days, whether or not consecutive, during any 30 consecutive trading day period, including the last trading day of such period, ending on and including the trading day immediately preceding the date on which the company provides notice of redemption, at a redemption price equal to 100% of the principal amount of convertible 2032 notes to be redeemed, plus accrued and unpaid special interest, if any, 2, but excluding the redemption date, no sinking fund is provided for the notes. Note holders may require the company to repurchase their convertible 2032 notes on December 15, 2028, at a cash repurchase price equal to 100% of the principal amount of the convertible 2032 notes to be repurchased, plus accrued and unpaid special interest, if any, 2, but excluding the repurchase date. In addition, if the company undergoes a fundamental change, as defined in the 2032 indenture, then, subject to certain conditions, and except as set forth in the 2032 indenture, holders may require the company to repurchase for cash all or any portion of their convertible 2032 notes at a fundamental change repurchase price equal to 100% of the principal amount of the convertible 2032 notes to be repurchased, plus accrued and unpaid special interest, if any, 2, but excluding the fundamental change repurchase date. The 2032 indenture includes customary terms and covenants and sets forth certain events of default after which the 2032 notes may be declared immediately due and payable, and sets forth certain types of bankruptcy or insolvency events of default involving the company or any of its significant subsidiaries. As defined in the 2032 indenture, after which the convertible 2032 notes become automatically due and payable, if an event of default other than certain bankruptcy and insolvency-related events of default with respect to the company, or if any significant subsidiaries occurs and is continuing, the trustee by notice to the company or the holders of at least 25% in principal amount of the outstanding convertible 2032 notes by notice to the company and the trustee may, and the trustee at the request of such holders, shall declare 100% of the principal of and accrued and unpaid special interest, if any, on all of then outstanding convertible 2032 notes to be due and payable. All right. Credit facilities. We maintain uncommitted letter of credit facilities with certain banks that provide for the issuance of letters of credit and bank guarantees, at times supported by cash collateral. See Note 15, Commitments and Contingencies, for further information regarding outstanding standby letters of credit and other bank guarantees. On August 27, 2024, we voluntarily terminated our $250 million revolving credit facility, which would have matured in November 2026, including all commitments and obligations thereunder. In connection with the termination, we canceled all letters of credit issued thereunder, and replace them with letters of credit issued under our uncommitted letter of credit facilities, supported by cash collateral. Digital assets and related receivables. During the second quarter of the fiscal 2025, the company purchased 4,710 Bitcoin. During the fourth quarter of fiscal 2025, the company pledged 4,709 of the Bitcoin as collateral in a covered call strategy, resulting in the derecognition of the Bitcoin digital asset and the recognition of a Bitcoin digital asset receivable. The following table summarizes the company's digital roll forward and holdings for the year ended January 31st, 2026. So, from what I know, pledging is getting a loan from your Bitcoin. So I'm just like, I don't know if they did the covered call thing separate from the pledge, or maybe since it was over the counter, they had to pledge their Bitcoin to do the covered calls. I would really like to know more information about that. But there's just very weird language in the earnings report, and it doesn't really make a lot of sense. Following table provides the required disclosure for our crypto assets holdings of January 31st, 2026, including units held, cost basis, fair value, and cumulative unrealized gain/loss. They hold 1 Bitcoin. So funny, bro. They just hold one Bitcoin. That shit's hilarious, bro. What's up, Isaiah? How you doing, bro? During the fiscal year end, January 31st, 2026, the company recognized a net loss on digital assets and related receivables of $131.6 million. This was primarily driven by a $71.8 million realized loss upon the derecognition of digital assets pledged as collateral in a covered call strategy, a $59.7 million unrealized loss on the digital asset receivable, and $0.1 million measurement loss on remaining digital asset holdings. The following table summarizes the components of loss on digital assets and related receivables in the consolidated statement of operations for the year ended January 31st, 2026. Well, since the Bitcoin's not technically on the balance sheet anymore, it might not count towards net income. It might not be a negative towards net income. I mean, I don't know, man. I guess we'll find out, because they still do have the digital assets and related receivables. I just unrealized loss on digital asset receivable. I'm just so confused on that part. They made it very weird language, because from what I've read so far, it seems like they sold the covered calls at all-time highs, and then on January 16th, they put the collateral up, and they pledged their Bitcoin, which if you look up what pledging Bitcoin is, it's literally getting a loan on your Bitcoin. And I mean, maybe selling covered calls could be considered a loan, but I don't think that's really the case. So it's almost like they sold covered calls and then pledged their Bitcoin. And also, all the covered calls are expired as of tomorrow. So I don't know. It's just very weird how they reported that. Very weird. Income taxes. Oh wow, they got $34.4 million of tax benefit expense. I think I'm reading that right. Interesting. Components of income / loss from continuing operations before taxes. So if they lost money before taxes and foreign business, but absolutely crushed in the U.S. The following table reconciles the U.S. federal statutory tax rate to our effective income tax rate on income from continuing operations, presenting both dollar amounts and percentages in accordance with ASU 2023-09. Income taxes, topic 740, improvements to income tax disclosures. This disclosure reflects the disaggregation of specific tax categories for the current reporting period. Okay. Tax rate, 21% tax rate. Okay. Tax credits, got $1 million. Non-deductible interest from warrant distribution. Oh, they got deductible interest from warrant distribution, I think. That's actually really interesting if I'm reading that correctly. That's very interesting. Oh, that's interesting. Capital loss carry forward 4.8, change of valuation allowance, state income taxes net of federal effect. So they paid $117 million. Oh wait. They paid $14 million in taxes. Change in valuation allowance, $117 million. I wish I knew more about this. This looks interesting. Because they went from whatever change in valuation allowance, they went from $30 million to $117 million. So I don't really know what that means. Oh, and they have all the separate entities: Canada, France, Ireland, Luxembourg. Except those should all be gone from the balance sheet, potentially, on this year. State and local taxes in Arizona, Illinois, New Jersey, New York, and New York City accounted for more than 50% of the tax effect in this category. Wow. Oh, that's crazy. 5 states are more than 50% of the tax effect. I wonder if that's a positive, though. I wonder if it's like deductions or something. Like, I don't know. I wish I knew more about this. Following table provides the disclosures required before adopting ASU 2023-09 and reconciles our effective tax rate with the U.S. federal tax rate. So their federal statutory tax rate's been 21%, state income taxes net of federal effect. Oh, this is 2024 and 23, so I don't think we need to go through that. Upon adoption of ASU 2023-09, income taxes, topic 7740, improvements to income tax disclosures, cash paid for income taxes, net of refunds, disaggregated by jurisdiction was as follows: 28 million for federal, 2.6 million for state, and 2.8 million for foreign. Total cash paid for income taxes, net of refunds. So they paid 33.8 million in income tax, I guess. Differences between financial accounting principles and tax laws cause differences between the basis of certain assets and liabilities. For financial reporting purposes and tax purposes, the tax effects of these differences, to the extent they are temporary, are recorded as deferred tax assets and liabilities, which are presented in the table below. Deferred tax asset. Oh, okay, so I understand this. So they deferred a bunch of tax off of inventory, a little bit off rents, 7.6 million off inventory, like I think that's 200K off deferred rents, property and income, or property and equipment, 1.8 million deferred tax, 73 million of lease liabilities, stock-based compensation, 1.6 million, net operating losses and other loss carry forwards, 383.7 million. Wow. That's quite a bit of deferred tax for that. Customer liabilities, 21, and a bunch of small numbers. Digital assets and related. Oh, they get deferred taxes off of digital assets and related receivables? I don't know if I'm viewing this correctly, but so total deferred tax assets, 551 million. Valuation allowance, 403 million. Total deferred tax assets net, 147 million. I wish I knew more about this tax stuff. It's kind of confusing. Deferred tax liabilities. Oh, interesting. So 86.8 million in net deferred tax assets. Total deferred tax liabilities. Yeah, that part's confusing. So deferred income taxes assets, 86.8 million. Deferred income taxes liabilities, nothing, I guess. Because I guess the deferred tax liabilities count towards the deferred tax assets, I guess. That's what it seems like. Very confusing, very confusing. During fiscal 2025, we increased our valuation allowances by net 111 million. This net change reflects increases of approximately 253 million of increases in certain international jurisdictions where additional losses were generated and the related deferred tax assets are not expected to be realizable, partially offset by approximately 141.1 million of releases in jurisdictions that return to profitability after previously being in cumulative loss positions. As of January 31st, 2026, we maintained full valuation allowances on all international deferred tax assets, except those in Australia, and we maintain valuation allowances on only certain deferred tax assets in the United States, rather than a full valuation allowance. We will continue to assess the realizability of our gross and net deferred tax assets in all tax jurisdictions in future reporting periods. Okay, cool. With respect to the state and local jurisdictions and countries outside of the United States, we and our subsidiaries are typically subject to examination for 3 to 6 years after the relevant income tax returns have been filed. Although the outcome of tax audits is inherently uncertain, we believe that adequate provisions for tax, interest, and penalties have been recorded in the accompanying consolidated financial statements for any adjustments that may arise from state, local, or foreign tax examinations. As of January 31st, 2026, we had approximately $30.9 million of U.S. federal net operating loss carry forwards acquired through the ThinkGeek acquisition, which will expire in years 2031 through 2036. We also had $275.5 million of state NOL carry forwards, of which $239 million will expire between 2025 to 2044. $26.9 million have no expiration date, and $9.5 million acquired through the ThinkGeek acquisition will expire between 2029 through 2036. Section 382 under the Internal Revenue Code imposes limitations on the utilization of tax attributes following an ownership change. The federal and state NOL carryforwards acquired through the ThinkGeek acquisition experienced an ownership change on July 17, 2015, and we have determined that these NOLs will be subject to future utilization limitations. We have approximately $2.2 million of foreign tax credit carryforwards that expire between 2025 through 2027, and approximately $1.36 billion of foreign NOL carryforwards in various jurisdictions that have no expiration period, substantially all of which relate to Luxembourg and were generated primarily from impairments of international subsidiaries that we have divested or are currently held for sale. So they probably won't get rid of Europe because they have all those NOLs. 1.36 billion in foreign NOL carry forwards? That's huge. Is it not? I think that's massive. That's wild. As of January 31st, 2026, the gross amount of unrecognized tax benefits was approximately $5 million. If we were to prevail on all uncertain tax positions, the net effect would result in approximately a $5 million benefit to our effective tax rate, excluding any related to interest and penalties. The following table presents a reconciliation of the changes in the gross balance of unrecognized tax benefits. Okay, so their unrecognized tax benefits are going down. This is what stands out. Approximately 1.36 billion of foreign NOL carry forwards. Like there's something to that. All these other numbers are kind of small. I mean, there's a couple large ones, but that one's huge. We recognize accrued interest and penalties related to unrecognized tax benefits within income tax expense in our consolidated statement of operations. As of January 31st, 2026, February 1st, 2025, and February 3rd, 2024, we had approximately $2 million, $2.2 million, and $1.6 million, respectively, of accrued interest and penalties. During fiscal 25, 24, and 23, we recognized approximately $0.2 million of benefit, $0.6 million of expense, and $2.1 million of benefit, respectively, in income tax expense related to those items. If we were to prevail on all uncertain tax positions, the reversal of these accrued interest and penalties would result in a corresponding benefit to our effective tax rate. It is reasonably possible that the amount of the unrecognized benefits with respect to certain positions could significantly increase or decrease within the next 12 months as a result of resolving ongoing audits. However, because audit outcomes and timing are inherently uncertain, and given the complexity of the issues involved, we are unable to reasonably estimate the potential change, if any, in unrecognized tax benefits during that period. Nevertheless, we believe our reserves for uncertain tax positions are adequate as of January 31st, 2026. We do not assert indefinite reinvestment with respect to the undistributed earnings of our foreign subsidiaries. Income taxes and/or withholding taxes associated with amounts available for distribution as of January 31st, 2026 are not expected to be material to our financial statements. The Organization of Economic Cooperation and Development, OECD, supported by more than 150 member countries, has agreed to implement a global minimum tax rate of 15% tax on certain multinational enterprises under the Pillar 2 framework. These rules began taking effect across various jurisdictions in 2024 as countries enacted legislation aligned with the OECD model. In fiscal 2025, the company did not incur any Pillar 2 top-up taxes and therefore recorded no related impact to the fiscal 2025 effective tax rate. The company will continue to evaluate additional OECD guidance, as well as pending and enacted legislation in the jurisdictions in which we operate. Commitments and contingencies. Commitments. As of January 31st, 2026, we had approximately $6.7 million of outstanding standby letters of credit and other bank guarantees supported by $5.5 million of cash collateral that is included in restricted cash. As of January 31st, 2026, we have purchase obligations of $128.7 million, with payment dates through fiscal 2026 that represent outstanding purchase orders for merchandise from vendors. These purchase orders are generally cancelable until shipment of the products. See Note 9, Leases, for information regarding commitments related to our non-cancelable operating leases. What's up, Ruben? Legal proceedings. In the ordinary course of business, we are, from time to time, subject to various legal proceedings, including matters involving wage and hour employee class actions, stockholder actions, consumer class actions, violent acts, and other conflicts. We may enter in discussions regarding settlement of these and other types of lawsuits, and may enter into settlement agreements if we believe settlement is in the best interest of our stockholders. We do not believe that any such existing legal proceedings or settlements, individually or in aggregate, will have a material effect on our financial condition, results of operation, or liquidity. Assets held for sale. During the first quarter of fiscal 2025, management approved a plan to divest our operations in France. Accordingly, all relevant assets and liabilities associated with these operations were reclassified to held for sale assets on the consolidated balance sheet, and as of January 31st, 2026 are as follows. Oh wow, they're giving you interesting. There's a $22 million in cash and cash equivalents for sale, $8.7 million in receivables, $53 million in merchandise, $5 million prepaid expenses, $12.9 million in property, lease right of use assets, $58 million, other non-current assets, $15.3 million. So total assets held for sale gross, $177 million, and then less impairment loss. So total assets held for sale, $146.5 million. And that's kind of cool that they broke this down. And then they got liabilities held for sale, current liabilities, $86.4 million, non-current liabilities, $49.7 million. So $136 million of liabilities held for sale, which is like, what is that, like $290 million or something, close to $300 million. Based on the expected fair value of this business, net of our costs to sell, we recognize an impairment charge of $17.2 million on assets held for sale for the French Disposal Group in the first quarter of fiscal 2025. During the remainder of fiscal 2025, we recorded additional impairment charges totaling $12.6 million. These amounts reflect the remeasurement of the carrying value of the French Disposal Group to its fair value, including related amounts in accumulated other comprehensive income. Class A common stock and share-based compensation. Class A common stock. The holders of Class A common stock are entitled to 1 vote per share on all matters to be voted on by stockholders. Holders of Class A common stock will share in any dividend declared by our board of directors. In the event of our liquidation, dissolution, or winding up, all holders of Class A common stock are entitled to share ratably in any assets available for distribution to holders of shares of Class A common stock. During fiscal 2024, we sold an aggregate of 140 million shares of our Class A common stock under an at-the-market equity offering program, the ATM transactions. We generated $3.47 billion in aggregate gross proceeds from sales under the ATM transactions. All associated commissions and administrative fees were recognized in additional paid-in capital on our consolidated balance sheets and selling, general, and administrative expenses in our consolidated statement of operations. Share-based compensation. In June 2022, we adopted the Gamestop Corp 2022 Incentive Plan, the quote 2022 plan, which provides for the grant of equity awards to our officers, associates, consultants, advisors, and directors, and which replaced the Gamestop Corp 2019 Incentive Plan, the quote 2019 Incentive Plan, and the amended and restated Gamestop Corp 2011 Incentive Plan, the 2011 plan. Awards under the 2022 plan may take the form of stock options, stock appreciation rights, restricted stock awards, restricted stock units, performance awards, and other share-based awards, or any combination of the foregoing. The 2022 plan allows for 32 million shares of Class A common stock, plus any shares subject to 2019 plan awards that expire, are forfeited, canceled, or terminated after the adoption of the 2019 plan. No awards were granted under the 2019 or 2011 plan after the adoption of 2022 plan. Oh, interesting. So I didn't know that. They're actually planning on diluting 32 million more shares under stock-based compensation, which not that crazy, but good to know. And they've already paid out probably not a lot of it, but a bit. Restricted stock units. Restricted stock units, RSUs, represent a right to receive one share or the value of one share upon the terms and conditions set forth in the applicable plan and award agreement. We grant RSUs to certain of our associates, officers, and non-associate directors. We use the stock price on the grant date to estimate the fair value of our RSUs. The grant date fair value of RSUs is amortized to expense on a straight line basis over the vesting period. RSUs are not eligible to receive cash dividends. However, they are entitled to dividend equivalent rights, which mirror the dividends declared and accumulative as additional RSUs, payable only upon vesting. They're entitled to dividend equivalent rights. So is that like warrants? I don't know. Restricted stock awards. The fair value of restricted stock awards, RSAs, is recognized as compensation expense on a straight line basis between the grant date and the date the RSAs become fully vested. We have granted RSAs to certain associates, officers, and non-associate directors. We estimate the fair value of RSAs on the grant date based on the quoted market price of our Class A common stock. RSAs granted by us are considered to be legally issued and outstanding as of the date of grant, notwithstanding that the shares remain subject to risk of forfeiture if the vesting conditions for such shares are not met, and are included in the number of shares of Class A common stock outstanding disclosed on the cover page of this annual report on Form 10-K as of March 18, 2026. The total number of shares presented on our consolidated financial statements represent shares of our Class A common stock that are legally issued and outstanding. There were no remaining non-vested shares of RSAs as of January 31st, 2026 and February 1st, 2025. Time-based RSAs and RSUs generally vest in installments, subject to continued service with us, and subject further to accelerated vesting in the case of retirement eligibility and certain termination events. The following table presents a summary of our RSU activity. So, see, non-vested shares at February 1st, 2025. So granted 2 million, vested 1.2 million, forfeited 705,000, non-vested shares at January 31st, 2026, 2.25 million. And grant date fair value, they're all around, between $22 and $24. Pretty interesting. In fiscal 2025, 24, and 23, there were 2.3 million, 2.2 million, and 4.1 million of restricted stock awards and restricted stock units outstanding, respectively. During fiscal 25, 24, and 23, we granted 2,062,000 shares, 2.9 million shares and 2.2 or 2.4 million share time-based RSUs, respectively, with weighted average grant date fair values of $24, $23.56, and $17.27. No time-based RSAs were granted during the fiscal 2025, 24, or 23. We recognize stock-based compensation expense, inclusive of forfeitures of $26.7 million, $16.4 million, and $22.2 million in fiscal 25, 24, and 23, respectively within selling, general, and administrative expenses in our consolidated statements of operations. As of January 31st, 2026, unrecognized compensation expense related to non-vested time-based RSUs totaled $46.6 million, which is expected to be recognized over a weighted average period of 2.1 years. Okay. Income tax benefits associated with stock-based compensation were recognized in fiscal 2025, primarily due to the release of valuation allowance on deferred tax assets related to such compensation. There was no income tax expense, including excess tax deficiencies or valuation allowance impacts, related to stock-based compensation for fiscal 24 and 23. The total fair value of RSAs and RSUs vested, measured as of the respective vesting dates, was $30.9 million, $33.4 million, and $43.2 million during fiscal 25, 24, and 23, respectively. CEO Performance Award. On January 6, 2026, the Board of Directors announced a performance-based non-qualified stock option award, the CEO Performance Award, to Ryan Cohen, the company's chairman and chief executive officer. The CEO Performance Award is subject to shareholder approval, and therefore no stock-based compensation expense has been recorded in fiscal 2025. Related party transactions. One of the company's directors, Nat Turner, also serves as the chairman and chief executive officer of Collectors Holdings, Inc., quote, Collectors, the parent company of Professional Sports Authenticator, PSA. As a result, Collectors and PSA are considered related parties under ASC 850, Related Party Disclosures. During the third quarter of fiscal 2024, the company announced that it entered into a collaboration with Collectors through its PSA division. Under this arrangement, the company became an authorized PSA dealer, and PSA provides authentication and grading services for trading cards through select Gamestop stores across the United States. During the second quarter of fiscal 2025, the company launched Power Packs, a digital trading card platform developed in collaboration with PSA. Transactions with Collectors and PSA were not material, individually, or in aggregate during the current fiscal year. All right, so yeah, you're going to see all the Power Pack stuff for 2026, I assume. Subsequent events. Subsequent to year end, the company posted approximately $0.7 billion, so $700 million, of cash into an account of the company that is pledged as collateral for certain existing and potential cash or physically settled derivative transactions. Wait. Subsequent to year end, the company posted approximately $700 million of cash into an account of the company that is pledged as collateral for certain existing and potential cash or physically settled derivative transactions. So they're hiding $700 million from the balance sheet potentially. That's what that tells me. Is that really the last thing? I mean, there's some other stuff here. That's an interesting thing to end on. They're just saying they're basically hiding $700 million potentially. Maybe. I don't know. That's pretty interesting. Changes in and disagreements with accountants or accounting and financial disclosure, none. Controls and procedures. Evaluation of disclosure controls and procedures. As of the end of the period covered by this report, our management conducted an evaluation under the supervision and with the participation of our principal executive officer and principal financial officer of our disclosure controls and procedures as defined in Rules 13A-15E and 15D-15E under the Exchange Act, Disclosure controls and procedures are designed to provide reasonable assurance that the information required to be disclosed in the reports that we file or submit under the Exchange Act have been appropriately recorded, processed, summarized, and reported on a timely basis, and are effective in ensuring that such information is accumulated and communicated to management, including our principal executive officer and principal financial officer, as appropriate to allow timely decisions regarding required disclosure. Based on this evaluation, our principal executive officer and principal financial officer concluded that, as of the end of the period covered by this report, our disclosure controls and procedures are effective at the reasonable assurance level. Notwithstanding the aforegoing, a control system, no matter how well designed and operated, can provide only reasonable, not absolute, assurance that it will detect or uncover failures to disclose material information otherwise required to be set forth in our periodic reporting. Management's annual report on internal control over financial reporting. Our management is responsible for establishing and maintaining adequate internal control over financial reporting. As such term is defined in Rules 13A-15F and 15D-15F. Our internal control over financial reporting is designed to provide reasonable assurance regarding the reliability of financial reporting and the preparation of financial statements for external reporting purposes in accordance with GAAP. A company's internal control over financial reporting includes policies and procedures that 1. Pertain to the maintenance of records that in reasonable detail, accurately and fairly reflect the transactions and dispositions of the assets of the company. 2. Provide reasonable assurance that the transactions are recorded as necessary to permit preparation of financial statements in accordance with GAAP, and that receipts and expenditures of the company are being made only in accordance with duly documented authorizations of management and directors of the company. And 3. Provide reasonable assurance regarding prevention or timely detection of unauthorized acquisition, use or disposition of the company's assets that could have a material effect on the financial statements. Due to inherent limitations, internal control over financial reporting may not prevent or detect misstatements. Projections of any evaluation of effectiveness for future periods are subject to the risk that controls may become inadequate because of changes in conditions, or that the degree of compliance with the policies or procedures may deteriorate. Under the supervision and with participation of our management, including our principal executive officer and principal financial officer, we conducted an evaluation of the effectiveness on our internal control over financial reporting as of January 31st, 2026, based on the Internal Control Integrative Framework 2013, issued by the Committee of Sponsoring Organizations of the Treadway Commission, known as COSO. Based on such evaluation, the company's management concluded that as of January 31st, 2026, company's internal control over financial reporting was effective at a reasonable assurance level. KPMG LLP, our independent registered public accounting firm, has audited our consolidated financial statements, including in this annual report, and has issued a report on the effectiveness of our internal control over financial reporting as of January 31st, 2026. Please refer to KPMG LLP's Report of Independent Registered Public Accounting Firm, included in Part 2, Item 8 of this Form 10-K. Changes in internal control over financial reporting. I don't even know if I need to read all this. I think we're pretty much done, but might as well just finish it. There was no change in our internal control over financial reporting, as such term is defined in Rules 13A-15F and 15D-15F under the Exchange Act. During our most recently completed fiscal quarter, there's material that has materially affected or is reasonably likely to materially affect our internal control over financial reporting. Controls and procedures. Report of independent registered accounting firm. Our independent registered public accounting firm has audited the effectiveness of our internal control over financial reporting as of January 31st, 2026, and has issued its report, which is included in Part 2, Item 8 of this Form 10-K. Other information. Security trading plans of directors and executive officers. On January 12th, 2025, Mark Robinson, the company's general counsel and corporate secretary, adopted a Rule 10b-5-1 trading arrangement providing for the sale from time to time of an aggregate of up to 38,802 shares of our common stock. The trading arrangement is intended to satisfy the affirmative defense in Rule 10b-5-1c. The duration of the trading arrangement is until July 31st, 2027, or earlier if all transactions under the trading arrangement are completed. Interesting. Aside from the plans disclosed above, none of the company's directors or executive officers adopted or terminated a Rule 10b-5-1 trading arrangement or a non-Rule 10b-5-1 trading arrangement during the company's fourth quarter of the fiscal year ended January 31st, 2026, as such terms are defined under Item 408A or Regulation S-K. Performance Award. On January 7th, 2026, the company issued a press release announcing that the board has granted a performance-based stock option award to Ryan Cohen, the company's chairman and chief executive officer. The press release indicated that the company's shareholders will be asked to approve the award at a special meeting that is expected to be held in March or April 2026. After consideration, the board has decided to bring the matter to shareholder for vote at the company's annual meeting scheduled for January 8th, 2026. Oh, that's good to know. They're going to do an annual meeting and the vote. Update on certain benefits and prerequisites, I guess. In accordance with the independently assessed executive security program established by our board, the company provides Mr. Cohen with executive security services. The aggregate incremental cost to the company of providing these services was $1,839,546 for the fiscal year ended January 31st, 2026. We believe these arrangements and costs are reasonable, appropriate, necessary, and in the best interest of the company and its stockholders, as they enable Mr. Cohen to carry out his responsibilities and therefore mitigate risks to our business. While we do not consider these security services to be a personal benefit for or compensation paid to Mr. Cohen because they arise from and are necessary for the carrying out of his employment responsibilities, this amount will be set forth in the definitive proxy statement relating to our 2026 annual meeting of stockholders, which is to be filed with the SEC pursuant to Regulation 14A under the Exchange Act and all other compensation. Column on the summary compensation table to be included therein. That's not applicable. Directors, executive officers, and corporate governance. Code of ethics. We have adopted a code of ethics for senior financial and executive officers that is applicable to our chief executive officer, principal financial officer, any vice president employed in a finance or accounting role, and any managing director or finance director of all our foreign subsidiaries. We have also adopted a code of standards, ethics, and conduct applicable to all of our associates. Each of the code of ethics and code of standards, ethics, and conduct are available on our website at Gamestop.com. In accordance with SEC rules, we intend to disclose any amendment other than any technical, administrative, or other non-substantive amendment to either of the above codes or any waiver of any provision thereof with respect to any of the executive officers listed in a paragraph above on our website, Gamestop.com, within 4 business days following such amendment or waiver. Let's see. Principal accounting fees and services. The information not otherwise provided herein that is required by items 10, 11, 12, 13, and 14 will be set forth in the definitive proxy statement relating to our 2026 annual meeting of stockholders to be held on or around June 8th, 2026, which is to be filed with the SEC pursuant to Regulation 14A under the Exchange Act. This definitive proxy statement relates to a meeting of stockholders involving the election of directors and the portions therefrom required to be set forth in this Form 10-K by items 10, 11, 12, 13, and 14 are incorporated herein by reference pursuant to general instruction G3 to Form 10K. A copy of our insider trading policy is filed as Exhibit 19.1 to this Form 10K. Exhibit and financial statement schedule. The following documents are filed as a part of this Form 10K. Index to consolidated financial statements. Our consolidated financial statements, together with the report of KPMG LLP, our current independent registered public accounting firm, and the report of Deloitte and Touche LLP, our predecessor independent registered public accounting firm, are included in Part 2, Item 8 of this Form 10K. Financial statement schedules required to be filed by Item 8 of this Form 10K. Following financial statement schedule for the 52 weeks ended January 31st, 2026, 52 weeks ended February 1st, 2025, and the 53 weeks ended February 3rd, 2024, is filed as part of this Form 10K and should be read in conjunction with our consolidated financial statements appearing elsewhere in this Form 10K. Other schedules have been omitted because they are not applicable. Interesting. Valuations and qualifying accounts. Valuations, allowance, and deferred taxes. Oh, we already went through all that. Are we finally at the end? Are we finally at the end, man? I think we're finally at the end. Form 10K summary. Well, we're at the end. We're at the end. That little piece towards the end where they said they put 700 million in a separate account or something. That makes me feel like they hid 700 million from the balance sheet, because from my personal analysis, I thought they were going to be sitting on 6 billion stockholder equity, and they're only at 5.4 billion. But if they actually hid some income or some cash or whatever, if that's even possible, where did that even say that? I don't even remember. Where was it? Yeah, this. Subsequent to year end, the company posted approximately 0.7 billion of cash into an account of the company that is pledged as collateral for certain existing and potential cash or physically settled derivative transactions. If they actually held or hid this or something and it's not on the balance sheet, I'm pretty good at this fundamental analysis thing. But yeah, I'm not really sure what that means there. Holy shit, we're done! Thank fucking God, dude. Oh my God. Thank God, bro. Holy shit. It's 6 hours of reading. Holy fuck, dude. 6 hours of just reading. Just non-stop. Ridiculous, bro. Actually ridiculous. What's up, Snake? What's up, Joseph? I should have sold when it went to 125K. Well, there's a saying. Fill shoulds, woulds in one hand and fill shit in the other, and see which one fills up faster. We all would have done a lot of things, but guess what? That doesn't matter. Talking about shoulds and woulds are, I'm not a big fan of that. Not a big fan of shoulds and woulds. What's up, Patel? How you doing, bro? Make sure you guys hit the like button. Only 4 likes on the stream. Kind of weird. Alright. There's a lot of GameStop articles and stuff, but I just don't know that I want to read it right now. I'm going to read the couple short ones, I think. But I think I'm done reading for fucking. I mean, I'll read more tomorrow, but I'm done reading for a little bit here. Besides these couple articles, where the hell is it? There's like an article about GameStop being worse than Pokemon scalpers, and then there's the other one where they're offering like $69 to trade in your PlayStation. Where is that? It's gone. Maybe it's on Kotaku. Might be Kotaku. Pokemon Center employee stabbed to death in Tokyo. Good lord. You might as well just start selling crack at this point. It might be safer to sell crack, bro. Might be safer to sell crack than Pokemon. Fucking crazy, bro. Yeah, it's right here. GameStop's no better than a scalper. So I'll read that. And then I will, come on. Why is my computer broken? There we go. There we go. This. And there's also a post I saw on Reddit that will go with that, I guess, for little short stream clips. Oh, there's the Gengar promo. It's about time. Oh, it's GameStop stamp too. $15. I don't even know what I would buy for $15 from GameStop, but that'd be a sick promo. GameStop stamped promo, dude. Psh, I don't even know what I would buy. I don't even know what I would buy, bro. Probably have to be there like right when they open too. Which I believe the GameStop near me is closed, so I don't even know which one I would go to. Oh yeah, this post. That'll go with Is that actually $69? $465 minus $327? Is that what it was? It's more than 69. They're actually offering $138 more of trade value than Xbox Series. It's pretty wild. Oh, man. I'm fucking dead, bro. It's already won. Alrighty. I guess I'll make a stream clip about this. Make a couple stream clips before I go. I've already been streaming for a little bit. I'm just fucking cooked, bro. I'm absolutely cooked. Alright. At least we got the stupid earnings report read. Like that, I'm actually pretty annoyed that I spent so much time on that because I could have streamed Beyond Earnings yesterday and probably got multiple thousands of views. But instead, I was reading some dog shit 10K that nobody cares about except me. It's fucking stupid, bro. GameStop is honestly such a waste of time to report on in a lot of ways. There's so many other things. At least as far as streaming goes. Like, the videos, nobody really watches any other video I post unless it's GameStop. But as far as streaming goes, it's kind of a waste of time. Especially when people are obsessed with trash businesses like Beyond. Better off talking about that. But whatever. Whatever. Okay. I guess let's just fucking get this shit done. Dude, my hair is a fucking mess right now. Alright. What's up, Varley? Let's get this stupid stream clip going. GameStop just released One Piece power packs, so we're going to go through some of the chase cards here. You got 021 Carrot, a PSA 10 for $1,600 on the $100 gold packs. I don't really know anything about One Piece. I've never watched the show. You got a Boa Hancock, PSA 10, $1,577 value from 2023. That other card was from 2025. I think One Piece is a relatively new trading card game as far as I'm aware. Yeah, Cave Cavendish, a PSA 10 for $1,550. These are all on the $100 gold packs. That'd be a great pull for $100. You got Monkey D. Luffy, PSA 10 for $1,500 and $1,520. Monkey D. Luffy. I'm surprised the Luffy card's not the most expensive one, but I guess it also makes sense why the girls are the most expensive cards. Bunch of weirdos out there want to collect waifu or whatever the hell it's called. You got a Roro Noah Zora, a PSA 10 for $1,500. You got a Marshall D. Teach, a PSA 9 for $1,500. Dang, a $1,500 PSA 9? That's insane. I feel like that's crazy, especially for like a 2024 card. That seems like quite a bit. Yeah, Portgas D. Ace, a PSA 10 for $1,475. You got a Kojaku, PSA 10 for $1,437. Yeah, Roro Noah Zora. Again, right? Isn't that the same card? Or is it just the same character? It's just the same character, okay. He's not as jacked in this one. A PSA 10 for $1,425. This was released 2026. That's a brand new card. Got a Nami, PSA 10, $1,400. I mean, of course people are paying $1,400 for this card. Fucking weirdos, bro. Some weirdos out there getting that Nami card. You got another Nami card, PSA 9 for $1,375. Good lord. A PSA 9 for $1,375 is crazy, bro. And then your final one on the $100 golds is Portgas Diace, a PSA 10 for $1,325. And to me, that's like the coolest card. That one looks pretty cool. But of course, the weirdos out there all want the waifu. Let's see. You get 500 platinum packs here. So the first one is Monkey D. Luffy, a PSA 10, $7,400. Wow. Wow. Crazy how much people spend on cards, bro. It's crazy that these cards are worth that much. Especially because they're all brand new. That's a 2024. Like, wild, bro. Yeah. Monkey D. Luffy, PSA 10, 7100. Good lord, bro. Good lord. Insane. Roro Noah Zora, a PSA 10, 7000. Good lord. That's a cool card, though. I like that one. But still, a 2025, like, how are these cards worth that much? Maybe there's just not that many in circulation or something. Like, I literally don't know anything about One Piece, so I don't know how it got so popular. I don't know how the cards are so expensive when it's like a brand new trading card game. It's very odd. Like, Pokemon kind of makes sense, but I don't understand One Piece. Yeah, 119 Monkey D. Luffy, PSA 10 for 6,600. Crazy. You got a Monkey D 119 Monkey D Luffy again, but this is a PSA 10 for 6,500. Didn't you have that in the golds for a PSA 9 or something like that? I swear we already saw that card, didn't we? Oh, it's just a different variation of this card. Okay. So this is the alternate art. This is the 3rd anniversary gold. Okay. But they're almost the same art, just a little bit different. You got a 61 Monkey D Luffy, PSA 10, 6,500. Good lord, dude. Crazy. You got 20 Roro Noah Zora, PSA 10, 4,350. 4,350. This was released this year, 2026. Wow. Wow. And then this is the same card? What's the difference? Serialized top prize. What's the difference between these two cards? One's 4,350, this one's 4,000. They're literally the exact same card. So I don't know what's up with that. That's weird. You got Tony Chopper, PSA 10 for 3,850. You got Monkey D Luffy, 119, PSA 10, 3,800. Another Tony Chopper, PSA 10, 3,535. Aren't those the same card? A little bit different. This one has like the dark. That's an alt art, and this is. Yeah, they're basically the same card. But this one just has like this little dark side of it. Very weird. One Piece cards are weird. One Piece cards are really weird. And then another Tony Choppa, PSA 10, 3,500. Crazy. Crazy how much that is. And now, what everyone's been waiting for. The diamonds. What are the diamonds worth? You got 119 Monkey D Luffy, PSA 10 for 13,600. Holy guacamole, bro. What's the difference between this one and the other one, though? What's the difference between that? It's just the variations of the card. They're literally the same card. They just have different variations of like 5 different variations of one card. It's kind of weird. 12 Monkey D Luffy, PSA 10, 9,182. 1st anniversary signature. That's kind of cool. That's kind of cool. You got 1 Monkey D Luffy, PSA 10, 8,308. Super pre-release winner. I don't know what that is. See, I wish I knew more about One Piece. I don't know anything about this, and I don't think anyone in my chat really knows about One Piece either. 120 Sabo, PSA 10, 8,300. It's just crazy how much cards are worth, to be fair. 119 Monkey D Luffy, PSA 10, 7,400, which I believe that was in the 500 packs. Yeah, that was the main chase card for the 500s. And then, yeah, a couple same cards from the 500s. You got 3 Monkey D Luffy, PSA 10, 7,100. I think the rest of these cards are all the chase, like the main chase cards for the 500 packs. Yeah, 76 Roro Noah Zora, PSA 10, 7,000. Yeah, that's the same card we already saw. I think all of these are. 119 Monkey D Luffy, PSA 10, 6600. And this card again, 119 Monkey D Luffy, PSA 10, 6500. Just different color variations. 61 Monkey D Luffy, PSA 10, 6500. And those two Roro Noah Zora cards, PSA 10, 4,350. And then I swear these are literally like the same card. I can't even like really spot the differences. Maybe the green on this one's a little bit lighter. This one's a little bit darker. That's the only like difference I can see. But then you got the Roro's Noah Zora PSA 10 for 4,000. And I'll never open one of these. I don't think I'll ever open power packs again. I've opened too many of them, and honestly, I think they're terrible. Like, it's a cool idea for GameStop, of course. It's a cool revenue stream, probably insane margins, but personally, I'm not interested in collecting cards. I'm not interested in gambling on cards. You know, maybe one day in the future, if GameStop works out in a really, really dramatic way, maybe I'll open some power packs for the lulz, but I don't plan on opening this trash anymore. All right, here we go. Little stream clip. Little stream clip. Little stream clip. Picked up a pack of One Piece once, and it was all sexy waifu cards. I think I hit a gyat pack. I do not know what that means. What the fuck's a gyat? Gyat! You gyat? Is that like when you get a boner while you're opening the pack or something? You're just like, yeah! Look at Nami! Or Nami, whatever. Gyat! Very, very limited prints. Just finished the Netflix season 2 of this show. Oh, nice. Nice. Now it's time to watch the anime, bro. 1,700 episodes or whatever. You gotta start now. You gotta start now, and maybe when you're like 50 or 60, you'll be done. Alright, a couple more stream clips before we go. Oh. That's why I'm sticking to the Netflix. Nah, bro, you gotta watch that anime, bro. Get in there, get in there. Alright, let's read this shit. GameStop is no better than a scalper as it hikes Pokemon card prices. While paying no more for the product itself, the retail chain is God damn it. Gotta restart now. I'm losing my voice, bro. That's what happens when you read 6 hours of fucking nothing. That's what happens when you spend 6 hours of your life reading a 10K out loud. You lose your fucking voice. Alright. GameStop is no better than a scalper as it hikes Pokemon card prices. While paying no more for the product itself, the retail chain is taking advantage of desperate customers. We've been banging on about current Pokemon TCG price bubble for well over a year, documenting the ridiculous scalping and resale markets, the adults fighting over cardboard, and the terrifying spate of armed robberies, and it is so far showing little signs of calming down. Of course, many are taking advantage of the situation, and among them is everyone's favorite meme-based gaming chain, GameStop. According to reporting by Polygon, the store is already infamous for hugely overcharging for new Pokemon TCG product, are pumping prices even higher. Well, they're competing with scalpers. I don't know why that's a negative thing. You might as well, in a world of a bunch of people scalping and making money off Pokemon, there's no point for GameStop to be selling their product to the scalpers so they can make money. It's better if GameStop just scalps and makes the money. For real, like, If you think this is a negative thing, I disagree. I think it's positive because GameStop's trying to get product to people who actually enjoy it and actually want to play the game or collect the cards, not just people trying to flip for like 20 bucks. Like most other products, Pokemon TCG packs and collection boxes are delivered to retail stores with an MSRP, the manufacturer's suggested retail price. They are by no means obligatory, but are generally adhered to in competitive markets where customers can instead visit a rival retailer if one tries to up the costs. And rather importantly, they represent a profit for the stores over the price paid for the product from wholesale. The MSRP on a new pack of Pokemon TCG cards is currently $4.49, up from the long-standing $3.99 since a couple years ago. That's what you should expect to pay if you are able to find a pack of the latest set, an act that's been incredibly tricky to achieve since around November 2024. Dude, even before like Pokemon got extremely hyped, I've never seen packs for that price. I think $5 or $6 is maybe the lowest I've ever seen. However, given the difficulty of finding any store that hasn't been stripped down by scalpers, GameStop has combined both the lack of alternatives and its larger buying power to feel confident to sell the packs to its customers at prices far higher than expected. Alongside making idiotic gambles on Bitcoin, idiotic gamble, they sold covered calls. Why do people talk about things they don't understand? GameStop has recently pivoted its business model to focus on the likes of Pokemon TCG. And part of this, says Polygon, has involved experimenting with the price of new Pokemon products, with hikes as high as adding an extra $10 to collection boxes at the start of last year, but that was at nothing compared to current pricing. By November 2025, GameStop was charging $7 for a sleeved single pack, which would usually cost you $5, while a booster box of 36 packs, MSRP'd at $143.64, was going for a ludicrous $239.99. Yeah, it's because the scalpers were selling it for like $250, so GameStop is, competing with scalpers by barely selling a little bit lower than the scalpers, because if you're buying product from scalpers, you might as well go to GameStop and save 20 bucks. And according to one GameStop staffer on Reddit, those prices are about to soar once more. Wait till you see the price changes print out, they write. What are we doing? With the latest set, Perfect Order, due out March 29th, I didn't even know there was a new set coming out. We'll soon find out what GameStop thinks its customers' upper limit might be at the moment. Rumors are flying around that Elite Trainer boxes, usually priced between $50 and $60, it tends to change per set, maybe set closer to $100. Well, if scalpers are selling it for $120, why wouldn't GameStop sell it for $100? Makes no sense to give scalpers the opportunity to make margin off of GameStop's product. It literally makes no sense. And any business, Target, Walmart, any of those businesses that are providing scalpers margin, I would say they're worse than GameStop. You shouldn't be giving people margin for their items. You should be making it difficult for them to buy the product and scalp it. This is, without question, gouging. GameStop is aware of the hype and taking advantage of its customers with what amounts to dynamic pricing. It is materially no different from the acts of scalpers. Well, no shit. Duh. Like, come on. Except that GameStop hasn't even had to pay any higher prices to source the products from the Pokemon Company International in the first place. The only solution to both GameStop's malfeasance and the whole ridiculous situation in its entirety is to just stop buying Pokemon cards altogether. Although there's little sign people are willing to try that. However, if you want to, here's our guide for still enjoying splendid hobby of Pokemon card collecting without having to buy any new products at all. Man, this is a terrible article, honestly. Like, it's cool that you're reporting on this, but to try to picture GameStop as the bad guy in a world of people who are buying out shelves of product and then going and flipping it on eBay. I appreciate that GameStop is doing this because I mean, I'm a GameStop investor, so the more money they make, the more valuable my investment becomes. You can't invest in a scalper. At least you can invest in GameStop shares and potentially gain value from GameStop scalping the product. You can't do shit with a scalper except get wrecked. All right. Terrible article. Terrible article. I'm still in the thumbnail. I'm still in the thumbnail, bro. I'm still in the thumbnail. Because I want to. Because I feel like it. Except I don't know if you can have Pikachu in a thumbnail. I guess it don't really matter. Walmart and Target both raised prices. Good. Perfect Order is the worst set ever dropped. I don't even know about it. Isn't that what people said about like Journey Together? And then Journey Together ended up doing pretty well. I wouldn't take anyone's opinion about anything like anymore. Honestly, people talk so much shit on Journey Together, and I'm pretty sure that performed pretty well after the hate died down. I don't know. I don't even know if I want to make this a stream clip. This is pretty short, but GameStop will pay you $69 to ditch PlayStation for Xbox. GameStop is known for its rather wacky trading, and now they are actively offering customers money to trade teams from PlayStation to Xbox. Whether it's through their Trade Anything initiative or their many viral posts on social media, GameStop is no stranger to a hilarious promotion to get customers through the door, and their latest actually encourages you to ditch your PS5. In a post on X, GameStop told users that they could trade in their PlayStation and get an Xbox Series S, with the company actively paying you $69 to trade teams, pitching the deal as a way to switch sides if they are bored with their current console. Well, they probably want PlayStations because they're going to go up in value quicker than Xbox. Bored of your PlayStation? Trade for an Xbox and leave with $69 more. We'll pay you $69 to trade teams. Essentially, all you need to do is trade in your PlayStation at a local GameStop, and you'll receive $69 on top of the value toward an Xbox Series S, effectively positioning the offer as a way to trade teams in the long-running console rivalry. There are some conditions attached, however. The offer is only valid until April 4th, 2026, and customers will need an active Pro membership to qualify. As with any trade-in, the console must include all necessary components and be in good condition. It's also a way to get people to buy Pro membership. Good little marketing thing here. Nevertheless, it's a hilarious spin on the current console wars, and despite the fine print assuring customers that the $69 payment is based on the difference between Pro Store credit for Sony PlayStation 5 Slim Console Disc Edition and Pro cost of refurbished Xbox Series S all-digital console, there's surely no coincidence it lands on that number. And I also don't know if it's 69. Maybe it is, but they also made this post yesterday as well, where their trade-in values for PlayStation 5 Pro is $465, PlayStation 5 $390, Nintendo Switch 2 $382, Xbox Series X $327, and Xbox Series S $272. So to me, it doesn't even make sense because they're offering like $200 more for trade-in values on a PlayStation 5 Pro than an Xbox Series S. So I don't really know. There's something weird about that, but kind of a cool promotion, I guess, just to get people to sign up for the Pro membership and, you know, trade in their consoles when PlayStations are clearly much more expensive than Xbox and probably are going to gain value a lot faster than Xbox. Okay. Journey Together has gone nowhere but down besides booster boxes. I don't really want to look it up, but I will. Wrong website. Which one? I forget. I haven't looked at freaking Pokemon in a while because I literally don't care about Pokemon. I don't even remember what website I used to use. I thought it was price charting. I mean, the ETB is basically the same price as when it came out, so I don't know. And I guess I was referencing booster boxes anyway, because why would you buy anything else besides a booster box? Oh, it's TCG Player that I was looking for. I mean, looks like it's up. Maybe not as much as when it first came out, but it's still up. ETB's not. ETB's actually cheaper than when it first came out, but it's still up overall. Destined Rivals ETBs are 500 plus. So, why does it matter whether it went up 4x or 2x? Like, it's still up. Like, I don't know. I don't even want to talk about that. That's crazy. And also, I didn't look up the Pokemon Center ones. Oh, that was Pokemon Center. That's only 173 bucks. That's pretty cheap. Doesn't mean it can't go up in the future. Just because it's not up as much as it is now, or as much as other sets are now, it doesn't mean it can't go up in the future. And if you're looking at it from a value perspective, that's pretty cheap. Saying there's other sealed worth buying than just booster boxes. Well, if we're gonna put it that way, Pokemon's a trash investment in general. You might as well buy something that actually like produces something, and it's not just a box that literally a box full of cardboard that potentially has no value. It only has value now because people are obsessed with it, but are people gonna still be obsessed with it in 5-10 years? Especially if the market crashes, like, are people going to continue to be obsessed with it? I think that's highly debatable if you want to go down that route. Pokemon in general could potentially be a terrible investment from the how highly valued they are in this current moment. It's just crypto. It's just physical crypto, basically. Physical NFTs. if Pokemon ever loses value, it's it's not gonna be good. I guess I should just say loses favor, because it losing favor is going to cause it to lose value, because all the people, it's just going to be a mass wave of people who are just hoarding Pokemon starting to sell because they see the prices are going down. I don't know. I wouldn't be invested in, or I wouldn't be interested in investing in Pokemon anyway. But the whole point of even looking that up was you said it was a terrible set, and it just goes to show that even a terrible set is still valuable. that was the whole reason I even looked it up. All right. I think that's pretty much it. I don't think there's anything else to talk about. Meta Boost investment in West Texas AI Center. 10 billion. I don't think any product you buy from Pokemon Center will ever go below that value in the next 10 years. I mean, maybe. Depends how much of it's out there. Still doesn't produce anything. It's just a box full of cardboard. Still no real value in Pokemon. The only value it has is the price that people put on it. Has no real value other than that. It probably won't. It probably won't, but still has no value. What happened yesterday? You disappeared. I don't know. I was just reading, and then I looked up, and the stream closed out. I'm not really sure. Oh, I'm done talking about GameStop, bro. I've read 6 hours of a 10K. I'm not talking about GameStop. I'm not talking about GameStop for now. I'm about to get out of here. I'm just seeing what other news there is, if there's anything. I'll read more stuff tomorrow, but I'm done with GameStop for now. Wasted 6 hours of my life reading a 10K. Yeah, there's some good information in there, but still was a waste. Neuralink patient is playing World of Warcraft with nothing but his thoughts. That's cool. I wonder if it's that same guy who was playing like Mario Kart. More reading. Ugh. I do want to read that, but I'm not going to. Yeah, I'm probably never doing that again though. Straight up. I'm never reading the earnings report again. It's the last time. Maybe maybe we'll see, but I'm probably not doing it ever again. Nobody shared the stream, nobody shared the videos, nobody like why should I put in all that work for you guys when you can't even like do anything for me? I'm just saying. I'm just saying, bro. That's crazy. I'm glad you guys enjoyed it if you did, but where do I get it? Do I get any benefit from it? No. I'd read it anyway, but I would just go read it in my own silence and time. I wouldn't be reading it aloud for 6 hours and losing my voice. So, probably won't happen ever again. Straight up. Probably won't happen ever again. Shared to all my buddies and brother. Well, thank you, bro. Thank you. Appreciate it. I appreciate it. Don't think they've looked at it though. Yeah, probably not. Nobody's gonna watch a 6 hour, well, 2.5 hour video. It's gonna be 6 hours total when I post the other half. It's redonkulous. It's redonkulous. Wasn't there mortgage data today? Yeah, rates are up a fuck ton, dude. No good, no good. They completely clapped real estate. That's so annoying. So annoying. They clapped real estate. Short interest updated. It's down a little bit, I think. I thought it was at like 16 something, but I don't remember. Yep. Appreciate you reading. No problem, AA Ron. Appreciate you supporting the stream, bro. Keep telling my brother to please watch it because he keeps sending me false info from AI and Reddit. That's all there is, bro. There's no good info out there. You can't read like a summary of GameStop. That's the that's the crazy thing. You can't read a summary. Like everything we've went through, nobody talks about a lot of that stuff that I read. Literally nobody. What's up with Best Buy? I guess the rumors are that GameStop's gonna buy Best Buy or something, but who knows? I don't put any weight on rumors or people's opinions, honestly. If I don't see the cold hard facts, I'm not interested. I did see a little article about that though, but it's just rumors. It's just rumors. Do have to drop out driving my. Let's see. Bro, go enjoy it. Part 2, market for registrants. I gotta get this video edited. It's gonna take forever to upload to YouTube. Yeah, I never actually looked at the stock. I just saw some headline about it. I don't even remember where I saw the headline. I don't even remember where I saw that at. Maybe it was just in here somewhere. Oh yeah, I was Seeking Alpha. Best Buy jumps amid speculation it could be target for GameStop. So I don't know. I haven't read that, and I don't necessarily want to because I've read too much. I've read way too much. So I don't even want to read it right now. I probably should though, huh? I mean, oh, fuck. No. Oh, it's really short. Okay, I can read this, I guess. I guess I can read it. I guess. All right. Best Buy jumps amid speculation it could be target for GameStop. Best Buy rose 5.3% amid speculation. I can't read, apparently. Best Buy jumps amid speculation it could be I can't read! This is what 6 hours of reading does to you. It fucking fries your brain, dude. It makes you stupid. Just kidding. Reading's good, but I've just read too much. I'm just kind of sick of it. All right. Best Buy jumps amid speculation it could be target for GameStop. Best Buy rose 5.3% amid speculation that the electronics retailer may be a potential takeover target for GameStop. Where did this speculation arise from, though? Like, that's the only reason I'm reading this. I want to know where the speculation even came from. People just saw the stock go up and they're like, oh, GameStop's gonna buy it. GameStop chairman and CEO Ryan Cohen said in late January he aims to pull off a very, very, very big acquisition of a larger consumer company that would be transformational for its future. It appears that GameStop bought a position on Swap, and this is likely the target that Cohen is circling. Gordon Haskett's Don Bilson wrote in a note on Thursday, Bilson didn't speculate on which company GameStop may be targeting. Wait, what? I don't know who those two guys are. GameStop disclosed in its latest 10K that it posted approximately $0.7 billion of cash into an account of the company that is pledged as collateral for certain existing and potential cash or physically settled derivative transactions. Bilson said previously he speculated that Best Buy could be a target, and there were some prime broker action in BBY in Q4, but that doesn't square with GameStop saying it puts its money to work after the fiscal year ended. GameStop didn't immediately respond to Seeking Alpha's email request for comment. Shares of GameStop fell 2.3%. See, that doesn't make any sense. How is Best Buy up but GameStop down? Like, that literally makes no sense. Who is Gordon Haskett and Don Bilson? Who the fuck is this? Who is that? The Gordon Haskett team. Head event-driven team. Don Bilson heads GHRA's event-driven research effort. Don has done 10 years of buy-side experience at firms including Tribeca Management, Excess Capital, Rockview Capital, and J. Goldman & Co. He has worked as a portfolio manager, analyst, and trader in both equities and credit. He's covered a number of different sectors, including telecom, consumer, and energy, and worked with a handful of investment strategies. Don subsequently created an event-driven product at Deal Reporter called Morning Flash, for which he was the sole contributor, and which was a precursor to the GHRA's event-driven research product. Prior to the buy side, Don was an investigative reporter in Washington, D.C., and before that, a congressional staffer. He holds a BA from the University of California, Los Angeles. Why is this guy important? I don't... How does he know something that nobody else knows? That doesn't make any sense. Let's see. let's see. Analyst research note released Thursday. It initially fueled that speculation from the firm Gordon Haskett. Actually said it was still unclear what company GameStop might have its eye on. And it said recent efforts by GameStop to put its money to work towards a transaction of some kind didn't appear to signal interest in Best Buy for now. What? He said that line from the filing. So this is just some dude's opinion. People are just speculating on some random guy's opinion. Okay. Not very interesting. Not very interesting. They're saying that GameStop bought a swap position. In what, though? So I guess what I was talking about was relevant, though. That they hid 700 million somehow. They either bought swaps or something. So technically your stockholder equity is like 6 billion, 6.1 billion. Potentially. Yeah, I don't know what's going on with that. But that's pretty interesting if they did that and pledged the Bitcoin for a loan, because that's an extra like billion, I would say, of cash. Yeah, I don't know. I don't know, man. I'm GameStopped out, bro. Oh, shit. I just don't get how speculation from some random guy is like anything. Just doesn't make any sense. Alright. I think it's time to get out of here, bro. I don't think there's anything else to talk about. And I'm just not in the mood to read anything else, so appreciate you guys supporting the stream. Thank you. I'll catch you guys later. And yeah. So maybe I'll try to get this Gengar promo, but probably not. I'm really not interested in buying cards, so probably won't happen, but if you guys are trying to get a Gengar promo, go visit a GameStop. Go visit a GameStop tomorrow and try to get that. But yeah, I'm out of here, bro. Later, Lobster. Later, Ruben. Later, AA Ron. Y'all have a good one, Matt. Peace out, bro. Later, Moose. I don't know who else is here. Maybe Hugh G. Maybe Varley. Appreciate you guys. Maybe Snakes. Maybe Patel. But I appreciate you guys. Have a good one. Later, Kevin and Roderick. I've never seen those names in here before, but I'll see you guys tomorrow. We'll read more. There's a lot of articles to read, so much more reading to come. But I appreciate you guys. Have a good one. Peace!